Good morning this Thursday, the 31st of August. I'm Grady Wolf, market analyst with Bell Direct. US equities advanced on Wednesday as investors digested the latest release of economic data. Annual GDP growth in the US was downwardly revised on Wednesday from the previously forecast 2.4% to 2.1% growth. This came alongside US payrolls data showing private employers added 177,000 jobs in August, which was below the Dow Jones estimate of 200,000, but adds a further sign of the US economy doing it tough in the high interest rate environment. The S&P 500 advanced 0.38% in its fourth straight winning session. The Nasdaq rose 0.54% and the Dow Jones added 0.11%. Tech stocks bolstered the gains on Wednesday after chipmaker and 2023 market darling Nvidia announced an expansion of its partnership with Google. Over in Europe, markets closed mostly marginally lower on Wednesday as investors responded to the latest release of economic data out of Spain and Germany. Spain reported flash inflation rate data rose 2.6% year-on-year in August, which was in line with expectations, while Germany reported a 13.2% drop in imports in the year to July, the sharpest drop since 1987. The Stoxx 600 fell 0.2% on Wednesday, Germany's DAX lost 0.24%, the French CAC fell 0.12%, and in the UK, the FTSE 100 added 0.12%. The local market closed 1.21% higher on Wednesday as investor sentiment was boosted by Australia's CPI indicator data, cooling to growth of 4.9% in the 12 months to July. Industrials and healthcare stocks posted the biggest gains on Wednesday, while real estate stocks also rose 1.31% on hopes of fewer or no further interest rate hikes in Australia as inflation continues to cool. Australia's monthly consumer price index indicator rose by 4.9% in the year to July from a 5.4% rise in June and below market expectations of a 5.2% rise last month. Although it is still above the RBA's target range of 2 to 3%, it is showing strong signs of cooling, which provides support for the RBA to ease its rate hike stance. Plus-size fashion retailer City Chic tumbled 4.4% on Wednesday after posting a 17.2% slide in sales over FY23, while Brambles rose 7.1% after the supply chain solutions specialist reported a 10% rise in revenue, a 19% increase in profit after tax, and a 15% lift in the company's dividend to 26.25 US cents per share. Regional Express, or REX, released FY23 results yesterday, which sent the share price down nearly 3% despite the company reporting a statutory profit after tax of $14.4 million compared to a loss of $46.1 million in the prior corresponding period. The result was boosted by a $44.5 million contribution from REX's 50% acquisition of National Jet Express during the year. The outlook seems bright for REX as it launches new routes to major urban centres including Hobart and Melbourne, which alongside the delivery of the 8th and 9th 737-800NG aircraft will boost the company's domestic position and market share. Flight Centre also fell out of favour with investors yesterday, despite the travel company reinstating its dividend. Across FY23, Flight Centre reported group total transaction value up 112% to $21.939 billion, revenue up $2.281 billion, EBITDA of $302 million, a profit before tax of $70 million, and a final dividend of 18 cents per share. No guidance for FY24 was issued, which may be the reason investors sold out yesterday. On the commodities front this morning, oil is up 0.6% at $81.63 a barrel. Gold is up 0.36% at $1,944 an ounce, and iron ore is flat at $115.5 a tonne. Ahead of the local trading session here in Australia, the ASX is set to open Thursday's session up just 0.06%. One Aussie dollar is buying 65 US cents, 94.61 Japanese yen, 50.97 British pence, and 1 New Zealand dollar and 9 cents. And now let's dive into some trading ideas for your consideration today. Bell Potter has increased the rating on Paragon Care from a hold to a buy. and maintain a 26 cents per share price target on the healthcare equipment, devices and consumables provider following the release of the company's FY23 results that included revenue up 24% to $307.6 million, EBITDA margin up 12.5% driven mainly by acquisitions, and reported NPAT increased 89% to $13.6 million. Revenue from the devices business increased 14% despite headwinds in the reimbursements paid by the prosthesis list. Bell Potter upgraded the company to a buy as it expects further organic growth in FY24 and acceleration of growth in FY25. And Trading Central has identified a bullish signal on Piedmont Lithium following the formation of a pattern over a period of 30 days, which is roughly the same amount of time the share price may rise from the close of 69 cents to the range of 91 to 97 cents, according to standard principles of technical analysis. And that's all we have time for this Thursday. Have a terrific day, and as always, happy investing.